On the show after a long hiatus. Hope all things well.
Thank you for having me over. It's been a nice break and a lot of rethinking about many things in life.
Now you've got a big thing called the coronavirus as well, which has had its impact on the market, Safir. But like we were chatting last evening, what a massive recovery as well from the March lows. Having said that, Safir, while you really want to believe what the ticker is indicating, you also know that it's just a handful of names which have lifted the index up, or for that matter, even the broader markets. Largely IT, a couple of the private banking names, and of course, Reliance Industries. Is it comforting right now, the market levels that we're at?
Well, to me, yes, and I have a very different perspective about this. What's happening is that if you take a sheet of paper and you dissect the market into two parts, you will find that while the index is suggesting a sort of a huge run-up, there is a large part of the market that is not performing, and the part of the market that's not performing is actually in trouble. For example, the real estate sector, the infra sector, we have a lot of NBFCs that are still not performing, a lot of the PSUs. So if you look at the performance side of the market, it is dominated essentially by IT, by pharma, by consumer, and by what is called as platform businesses. So when I look at the US market, and for example, if I try to convince myself that the market has run up in light of all the problems that exist, the real question is that what is actually called value migration is at play, because you're migrating away from offline to digital, you're migrating away from office work to work from home, you're migrating away from, in India, from urban to rural. And therefore, a lot of these businesses that are actually getting traction and are getting a thumbs up in the market are undergoing a fundamental change vis-a-vis the entire population and therefore the subscriber base.
Sure. On the digital platforms, Safir, while there's no denying that this is a theme that's going to stick by for the next foreseeable future, but the fact of the matter also is that the market has also tapped into this opportunity much ahead of the time. I mean, what explains the move that you've seen in a Google, in a Facebook, or for that matter, back home, even on a Reliance, or for that matter, an IndiaMart, for instance? We were just chatting with the management just a few days back. Do you sense that the value opportunity has just about begun in these domestic names, and are these themes that are going to be long lasting enough, or do you think much of it is already baked into the prices?
No, see, from an investor perspective, you have to look at the business from gauging whether it's going to have a longevity effect, or is it going to be just a sort of a hype that is created by the market forces right now. Now, if you look at it from a long-term perspective, there is a complete transition that is in place. I mean, take an example of a business like Jio or a business like IndiaMart. What is basically happening is that a lot of India is now forced to move away to digital, and they don't have the competency to understand digital except to go to a place of convenience, which happens to be, for example, these two names, or for example, many other names. Now, when they go to that place, the transaction cost for them, initially it was all about business. So, for example, somebody would get listed on these platforms only for the purpose of getting business for his physical location. But now, in light of the lockdown, etc., a lot of people are realizing that the physical location is going to become a virtual location. And if you look at the penetration of digital in India, it is still very, very low compared to, for example, the rest of the world. It's not something, for example, like chocolates, where, for years people have struggled to increase the market share. This is inevitable. I mean, even if you're sitting at home and you're working from home, there is no way that you're not going to embrace technology. And when you embrace technology, you're embracing a whole bouquet of things around that, whether it is banking, whether it is transaction, whether it is social networking, etc. So I feel that the potential of this lasting is very much in place. In fact, the innovation is only happening at this place. Every single day or the other, you hear about a new service launched by some of these leaders around the world, and therefore, it does not appear to me that the longevity of these businesses are going to be impaired.
Safir, morning. Nikunj also joining in. If I scan through what you have been tweeting on Twitter and what you currently like, interesting name where you've been quite proactively talking about is the credit card business. Now, it's a great business to be in. It does not require capital, you take a risk, and then CIBIL is there to protect you in case there is a default. But the challenge is that now, working at home, all of us are used to alternate ways of payment, whether it's a Google Pay or using the UPay application to make it from Phone Pay. So the basic transaction advantage which a credit card was giving you, do you think that will get diluted? I know credit card still gives you a promise of credit, but the basic transaction value will get diluted here.
Yes, I think so, for many reasons. First of all, people are, when a credit card is used, a lot of people may not be in possession of the money at that point of time, because a lot of people in India are salaried, and therefore they have a sort of a credit into their bank accounts on designated dates, which is again electronic. So at the same time, they have to meet a lot of their consumption. The second part of this entire thing is that because credit card statements are generated on a monthly basis, the ability to track your expenses and, if required, to demarcate between office expenses and home expenses is very much in place. The third part of it is that you actually get a boost of your ability to spend or ability to use the credit card if you follow a good pattern. So in a sense, your credit worthiness goes up, which is not necessarily the case when you, for example, are using your bank account and you're using a debit there, because then it is just a transaction. You need to have that money upfront. So in that sense, it's a good move away. And, also I, as a consumer, and I'm not trying to say this for Google because they're very safe, but as a consumer, I also find safety as opposed to many other forms of transaction, because the banks that issue the cards or the credit card companies like Visa, etc., have highly encrypted technologies. So from that perspective, the migration that is happening away, and also look at the size. So let my argument not be between credit card and, for example, Google Pay or other payment mechanism. Let it be an argument between cash and digital. And then look at the size of the market per se that is transiting into this arena.
Specialty chemical, well, the headline is that India is going to be exporting more, Atmanirbharta would increase, China's dependence will reduce. But you've picked up two names, SRF and the new IPO, last week's IPO, Rasori. Let's walk us through, why do you like in a cluster of 3-4 dozen companies just these two names?
No, these are not the two names that I like. I mean, I'm invested in SRF. I'm not invested in the IPO. I regret the fact that I did not buy it on the day of listing, but some part of it was also on the first day. It's not like pressing the button and winning the race, or you'll have to wait for the valuation to settle, and I need to study the company more. But essentially, companies like SRF and Atul are my large holdings in the chemical space. And the reason is not just the migration that is happening, but also very interesting environment factors, which I'm not talking in context of just China. The fact that a lot of these people now have safety mechanisms, a lot of these people have scaled up in terms of quality. Many of them are innovating for the first time. They have R&D pools, if you look at their annual reports, as opposed to being just commoditized businesses, etc. So the ability of, India's share in the API market, I was just reading a report from US, is just about 3% still of the global market. So that 3 becoming 4 or becoming 5 or becoming 6 is a humongous opportunity. And it's not that the whole chemical sector is going to be able to avail of this. It's limited. For example, a company like Aarti Industries or Alkyl Chemicals have become leaders in their own segment, and still the market share before them is huge. So, and then you'll have new models. New models will be when a very large company, comes to an Indian company and says, I like your facilities, I like your competence, your management, and I want to outsource. And, while I don't own it, but you saw the fortunes of Naveen Fluorochem changed instantly. And on a similar way, I'm tracking a company where DuPont is in active talks to scale up with that company.
Safir, when it comes to pharmaceuticals, I mean, it's a no-brainer right now. We've all seen the kind of surge in the value migration within pharmaceuticals as a segment. I mean, be it a DRL, be it a Biocon, or for that matter, even the chatter that we're hearing from some of the diagnostics companies. Just before your interaction, we were chatting with, Dr. A. Velumani from Thyrocare, and he said that COVID is going to be what diabetes and thyroid was to diagnostic companies the past 2 decades. Where within the unlisted universe or the new age opportunities do you foresee within pharmaceuticals and healthcare as a sector? And I'm not talking about the obvious, the DRLs and Alembics of the world, beyond that.
Well, I think one of the largest segments for growth in India is going to be disease management. And within while I've used the word disease management, it is not limited to disease, it will also be lifestyle management. And a lot of companies will, and I'm not talking just about preventive. Preventive is when you are having a medicine in order to circumvent something, for example, multivitamins or increasing your immunity. I'm talking about that a lifestyle change that will be tracked by a confluence of technology with pharma. So a lot of companies will create wellness programs, which will come from new age companies, and it will also come from some of the established players. And through technology, they will be able to track your activities willfully. So you will submit your data, for example, on an app, and they will give you guidance in terms of why does your blood pressure go up, why are you, for example, suffering from obesity and other things. So also the fact that with COVID, with the restrictions that have been imposed, while you may argue that some people may have exercised at home and done whatever they would have done, the reality is that it has exposed people to several potential outbreaks. For example, people who find it difficult to breathe or are asthmatic may be right now immune because they are in their homes. But the moment they are exposed, their immunity levels have already dropped to very low levels, and the susceptibility to pollution or to outside pollens, etc., will go up. So you will have a new breed of companies that are looking at all this. And for example, even in the listed space, even some of the diagnostic companies are now moving more towards management as opposed to just test, which is just deduction. So that will be a very interesting space. And similarly, for example, pollution monitoring companies. I mean, I'll give an example that I was talking to a company that essentially is in the unlisted space. And what they do is they say our data for analysis of pollution is significantly different from the data that we get when we Google, because the parameters that they are using for deducting pollution are extremely high. So they went on Amazon and they were, for example, selling their machines there that were much more accurate in reading pollution. But that's not the business, because you're not going to pay a 3,000 rupee price just to get a device to tell you what the pollution levels are. You need to take some action. So they have transformed their business model and, for example, gone to resident associations and said, we will place the pollution meters or the equipment that we have made within your colonies. And by virtue of that, we will be able to study 24/7 the movement of traffic, people, the collection of dump and garbage from the carts that come in, etc. And as a basis of that, feed the data to pharma companies to be able to predict that in 10 years down the line or 15 years down the line, how likely is it that people in that particular area will suffer from chronic diseases. Now, if you look at the application of that into many other streams, for example, the same things could be built in cars, and the same thing could be built in any other form of, where you could be exposed to pollution. Then you're talking about a very large size of the market before, opportunities like this. So it's not necessarily going to be pharma. It's also going to be this, like I said, the confluence of the technology with pharma.
That's really interesting. Safir, the other thing is that, and again, this has been a theme which has been ongoing for the last 2 years, but more so because of COVID, because of all of us staying home and the increasing dependence and even convenience that, digital brings with it. Do you think there is a big tectonic shift which is going to happen, and maybe in an accelerated fashion, between the unorganized to the organized sectors of the economy, and many by sectors will then stand to benefit within the listed and the unlisted universe?
I mean, massively. If you ask me, that assuming that there is no growth in the economy, or for example, there is some level of degrowth because of what is happening with the on the pandemic side, let's not forget that there is also a very significant movement that is happening with some of the players. For example, Amazon has announced that now the country of origin and the source of the manufacturer will be indicated on the website. And Flipkart has said that we are also formulating a policy. And similarly, other platform businesses will also. So first of all, let's look at the fact that counterfeiting, if it goes out of the system, because now you're regulated by the selling unit or platform, and also you are monitored by digital payments, which, unlike a cash transaction where there may not be bills and counterfeiting may be very rampant. Then the question is that if that counterfeiting comes to the organized sector itself, large players, whether it is a Procter & Gamble or a Unilever or other businesses, will have a massive volume growth, that will be triggered from a segment like this. The same logic is when you are restricting imports because of whatever reason, whether it is because of COVID or because now your customs will become more vigilant with inspection and maybe they'll cut down some of these, unorganized, unknown brands, etc., where the quality or the expiry date of products may have gone. Also, the fact that because of the packaging, since now everything has become so centric around health, expired products, it won't be so easy to sell expired products. So the result is that, and most of the expired products actually come in at huge discounts because they've really gone into no inventory. So here's the other way around: that you go to shops and you sometimes don't even find the biscuits or the noodles, etc., that you're looking for because people are just picking them up as the new supplies come. Everybody wants to beat the other person on freshness. So that transition that is happening into digital, firstly, into from cash to an accounted purchase, from unknown or unorganized sector into an organized sector, and from from counterfeiting into genuine products will be a huge transition for a lot of businesses. In fact, Amazon registry makes it now mandatory for, if you want to sell your product on Amazon, then they scan the database of your IP protection and they send an instant email saying that please produce your title documents before we list you. So that itself, in another sense, that will also create brands. It's not just about what they do in terms of sales, but it creates a lot of brands, and that means that the level of innovation, the level of brand awareness in the country will again go up, which goes very well for the organized sector.
Oh, yeah, absolutely. And the other thing is, because these brands are now getting into digital advertising, Safir, so much of their advertising costs, which was such a large piece of their costs earlier, gets saved. And, that I guess would then translate to dividend payouts.
And that's my understanding, that notwithstanding the taxation that exists on dividend, most of these companies have such high, returns on capital. And they are, they don't need that incremental capital really to grow because the market is getting structured on its own. So as a result of that, first of all, they're going to save a lot of money on advertising. The second part is that social media allows them to do a lot of regional advertising. They don't have to, for example, come and do a pan-India thing. They can do a different advertising for Delhi and a different thing for Mumbai, as an example. Because social media allows you to have that intelligence, where again they will borrow the intelligence from IT. So again, it's going to be a confluence between the collaboration of certain businesses. And thirdly, there's a lot of personalization. So for example, if I don't like the ad and I react to it on social media, the company knows instantly, and communication dialogue can start, even if it is a bot-driven thing. The result is that a transformation of understanding where the strength of the brand is and where the weakness is also very inept in a business like this. So it's a very interesting mode that some of these businesses will go through.
Sure. The other thing, Safir, is, as an investor, are you brave enough to contra-buy right now? There is distress in the economy, and especially segments between travel tourism, hotels, aviation, multiplexes. Is this the time to actually buy and maybe forget some of these names purely because they're so cheap? And whenever the economy does recover, these stocks are bound to do well.
No, absolutely. So when you look at your portfolio, you have to look at you can't be just driven by momentum and what is in the thick of things, because no matter what I say, I could be wrong. And that's the nature of the world. The world transforms, before we know. So there has to be, and every investor knows that there is something called reversion to mean. So it is not that, now the question is whether the reversion to mean is going to happen in 6 months, 1 year, 2 years. But since it's the nature of Nifty, for example, or the Sensex to outperform, and it is very difficult for an investor to keep coping up with that in order to, sort of beat the market, there has to be consequence in your portfolio that you believe will bounce back. Now, the first criteria of those is that the businesses should not be destroyed. And it's a very interesting thing, and you guys will understand and appreciate this. As an example, I turned bullish on the auto segment, several months back, and the argument was logical, and I don't say it is illogical, that there's a disruption there, and what are they going to do with e-vehicles, and Tesla has proven that what e-vehicles is doing. But at the same time now, with whether it is because of the migration to rural, where, for example, people use things like motorcycles and scooters to commute a lot, or some of the European countries where it is turning out that for reasons of social distancing, they're moving to buying scooters. For example, Europe, many parts of Europe are very fond of scooters, and same thing for motorcycles. So that balance will always be struck between the price of a company and the opportunity, if you believe that it's not going to be destroyed. Now, when you come to hotels, let's take the example of the largest listed company, Indian Hotels. So now you say Indian Hotels market cap is about 6,000 to 7,000 crores, and that seems to be ridiculous. But you know that they may not sell their hotels. They have at the same time comforted you with the fact that they're not going to buy more hotels. So as and when they generate cash, it's not going to be put into buying assets, and they're reinventing the model. So let me assume that Tata Sats, which is, for example, caters to all the airlines, is now not doing so well because, the airlines are not doing well. And they migrate that business into the equivalent of a cloud kitchen. And then they just developed an app which is called as Q-Min, which is Quick Minutes. And that obviously Tata's has the bandwidth of TCS and some of their other companies, to sort of understand technology well. And now they'll come and say, we deliver the food to your home. So the argument is going to be that some part of the business will come back. Contra argument will be, but it may be so expensive that I may occasionally do this and not frequently. But if the business moves towards TSAT, Tata Sats, and then they come and say we're using our cloud sort of business to deliver, then are you trying to say that the market cap of some of the QSR businesses will not get bridged, if not equated, because these guys will hopefully do a great job with their new businesses? So that form of innovation will always happen. And at some point of time later, you'll come and say, look, I'm got so sick of sitting in my home that I'm just waiting for a few days of COVID to get over, and then I'm happy to go into a hotel. And now they have rules in some parts of India that if you book a hotel, you have to book it for 5 days if you're going on vacation. So they are guaranteed 5 days of stay no matter what. And, please make calls to some of these hotels in Uttaranchal and Himachal and find out that they are getting a lot of reservations now.
Yeah, absolutely. And the other ancillary or rather work from home beneficiaries, if one can term them that, there is of course the obvious ones, Zerodha, other platform companies, because of the hike that you're seeing in hobby trading or work from home traders or Robinhood traders, whichever way you want to term that as. But the other ones as well, the laptops, the TVs, the Netflix, OTT, telecom consumption, a lot of ancillaries which stand to benefit from the work from home model, Safir.
Absolutely, and that is why I said that the market has got a dichotomy. There are businesses that are doing phenomenally well, and there are businesses that are struggling. And if you look at an entire pie and you reshuffle the money that exists in that pie, then you discover that it is clearly moving towards one side of the market vis-a-vis the others. But the move, which appears to be a frenzy and only time will tell, is also somewhat justified by an entire migration of the way we live. The very fact that we transact digitally, the fact that we watch Netflix, and the fact that we even if I look at, for example, an ordinary housewife today, because of the need for her to reinvent the food and to continue to have a social interaction, have you seen the amount of innovation that is happening in food? And that innovation in food is exposing India to newer levels of food that they perhaps have not experimented with. And again, that goes well for your economy, for your consumer companies, etc. Because the point is that they have substituted some part of their eating out budgets into buying these newer kind of food, newer kinds of cheese, newer kinds of olive oils, and all into experiment at their home. And at the end of the day, humans by nature, the definition of humanity is that a human is a social animal. So where are you going to bridge the gap between humanity and social? At some point of time, you'll again have new businesses, whether they're entertainment, whether they are collaborative, whether they are preventive, as in you allow somebody to come into your home and to sort of set up a nice entertainment for you, but at a certain price that you will pay. And I in fact in this lockdown just recently visited a salon chain in Delhi. And, I went and asked them that what is your price of haircut? So they said this was a price pre-COVID and this is a price post-COVID. So I asked, why is the price post-COVID high? They said, because we are exercising prevention, we use disposable sheets, and obviously our staff has been trained and we disinfect it much more and we buy these disposable gloves, etc. Now, let us assume that COVID goes away whenever. I don't know, or maybe the scare of it goes away and just our immunities are better and we start going back to, for example, salons. I don't think the salon is going to roll back the price. So if they're not, because people get habituated to paying that slight extra amount of money, and it becomes like a framing in your mind. So in that sense, if they move away some of the requirements that they're currently exercising, their profit margins will sort of get compensated by the incremental increase. It's a matter of time. The question is, we don't know when, and we don't know how the market is going to behave till then because of the very nature of the uncertainty.
Yeah, absolutely. Safir, so great chatting with you and getting all the insights, and we should chat more often. You shouldn't hibernate for two years.
My pleasure, and thank you for having me again.